Alice, thanks for your time. Another rate rise today, but no surprise there.
No, look, it was indeed expected, but it doesn't make it an any less bitter pill to swallow. And this is the fastest rate of rises that we've seen since the 90s. So probably some very sad people around the dinner table tonight digesting what that means for them.
Yeah, as you say, the 8th rise in a row, a total of 3% since April. What does that mean for the average mortgage holder?
Well, if you've got a $500,000 mortgage, it means you're going to pay an extra $893 a month. Now, the other thing is that number could still rise in the months to come, so you can really understand why, for many people, this is a very, very bitter pill to swallow.
It's also not just bad news for homeowners, but also for renters.
Yeah, it's really tough. Our vacancy rates around the country are at historically low levels at the moment. Now, this is going to add further pressure to that market. We know that landlords will usually pass this rate rise on directly to tenants. And what it's also doing is locking out any future first home buyers, locking them out of this market for longer and keeping them in that rental market. So the rental market's tight, and it means this will make it remain tighter for the time to come, knowing that it's going to cost more and more to service a loan.
The RBA governor did say, he predicted back in 2021 that rates wouldn't rise until 2024. He's been getting a lot of flack for that. Is that justified?
Look, the RBA can only really explain its own intentions, and we know that basically Governor Lowe has now apologised to people. We certainly did see people take their, take the advice that basically interest rates are low, they will be for some time, and we saw a huge surge in people buying property with those record low rates. Having said that, we understand the RBA were navigating incredibly, unprecedented times. We've been hearing this for quite some time now, but I think it goes to show how people need to prepare for the unexpected, and you need to be baking into these rate rises what could come in the future, knowing that they have been wrong in the past and potentially they may be wrong again. So I think that people really need to take this into their own hands and navigate it themselves, which could be refinancing or pulling in the purse strings, battening down the hatches, whatever way you want to do it, but really preparing for more further rates to come.
Yeah, it seems no one knows what's going on or what to do, but ING has announced it's dropping its fixed interest rates. Do you think that other banks will follow that lead?
Look, fixed rates are sort of a sign of what's to come from other banks. I think one bank doing this is not enough to sort of declare this is going to be a trend that's going to emerge. But I think it's really important that people start watching and also looking around and working out what you can do, and also shopping around. There's never been a better time to be a customer of a bank. They all want your debt, basically. So if you are in a situation, forensically look at those numbers and ensure that you're pushing that bank to do the best deal for you and your situation. I really encourage people to get ahead of these situations and say to their lender, what can you do? Or I'm having trouble here. Please help me before it gets too hard.
Yep. Do you think that a lot of people will be looking to fix? Should they take up those offers?
Look, fixed rates at the moment are definitely not what they have been, and what we are seeing is people walking towards that mortgage cliff because so many fixed a couple of years ago now. So look, I think if you can find a great fixed rate, good luck to you, but at the moment the variable rates are still what most people are having to go towards.
How much of a gamble is it though on whether rates will keep rising indefinitely?
Look, I think the Governor today has made it very clear, explicitly clear, I would say, that rates are going to keep rising. And what this means is that property prices will keep softening. So I think what you have to ensure here is that your rates are in line with what the value of your house is, and you don't get into that mortgage prison of the value of your house is actually less than what you're paying back for it. So I really encourage people to speak to their lender and ensure that they are taking the responsibility with that owner to sort of manage the risk and what's in front of them.
Finally, what about the dreaded R word, recession? Are we there? Is that where we're heading?
Look, it's the word on everybody's lips at the moment. I think given where unemployment is, we're clearly not at the moment. GDP figures will come out this week also. We'll have to watch what happens there. But I think we have to sort of find some ray of hope with looking at what unemployment is at the moment. We have such demand for workers across all levels of the economy at the moment. So until that changes, we have to just hope that now that people do what the RBA wants and basically curb spending, whether they want to or not, but knowing that we're going to see future rate rises rises. I think we've seen so many cautionary words from the bank today that they are really encouraging us to stop spending, stay at home and sort of lock ourselves in for the long ride.
Just before we go, are people going to splurge this Christmas, or do you think we're going to see some belt tightening because of the way things are heading?
I think that's part of what the RBA was doing today. I think, people there was a bit of speculation about would they potentially hold the rate today based on the most recent inflation figures. I think the RBA, had they done that, would have sort of sent a signal potentially to consumers of mixed messaging, that people might have come out and said, great, it's all over, let's go and party now. And clearly they're saying, don't do that. So I do hope that people take heed to that warning and actually potentially rein in spending this Christmas time, knowing that the worst could actually be around the corner still.
All right, we've thrashed it all out. Alice, thank you very much.
Thank you.
Alice Stoltz from Domain, which is majority owned by Nine.